All right, traders, we're going to be recapping the price action for Friday. Going to be recapping the trades. What this video is going to do for you is it is going to show you how to prevent getting trapped in put options. It's going to show you how to adapt to a trend. It's going to show you how to understand price action, where bull and bear traps are created. Say this level reacts as a ceiling, as a resistance. It's going to drop to this next level. Say this level reacts as a support level, as a floor. It's going to spike to this level. It's going to show you how to capitalize on trends, how to take advantage of bull and bear traps. Let's get straight into the analysis. So in terms of Friday, I went 6 for 6 with a 100% win rate, made a little bit over 7K on Friday. A lot of members within Trader Society ended up going red. I'm not sure why that is. From my understanding, a lot of them decided to buy puts and they just held the puts. They didn't scalp, they didn't adapt, and I'm going to show you how you can avoid, getting trapped and avoid, not having big losses, right? So that's what I'm going to do for you in this video. I'm going to show you how to trade like a sniper, scalp, get in, get out. So in terms of the key levels, and this was my analysis that I posted in the pre-market on Friday, let's just kind of go over this. So things to keep in mind for the short-term history, SPY has been gapping up. It's been topping out at around 950 AM for reversals towards pre-market highs, right? So that's been a very strong trend throughout the past week. That trend did not repeat itself. History doesn't always repeat itself, but I do bring awareness to it because it can potentially repeat itself, right? You have to be able to actually confirm using the charts and intraday price action if there's confidence and confirmation that history, that trend's going to repeat itself. Or is it going to do the inverse and not repeat itself and do something differently, right? So I brought some awareness to a trend that I was identifying. And then I said right here, this is what you need to focus on right here. So this was the key. Determine the pre-market highs before open. If it reacts as a resistance, we're going to drop to 403.74 to fill the gap. If the pre-market highs reacts as support, we're going to go to $408. So why did I say that? Well, let's go over it, right? So as you can see, the pre-market low was at the gap towards this 403.70 level, which is the previous closing price. SPY was gapping up, right? And the pre-market highs were right here. And in terms of what I said in my analysis, I made it very, very clear to my team, if the pre-market highs reacts as a ceiling, as a roof, then it'll be on track to go to $408. If it reacts to as a resistance, as to a support level, then I'll be on track to fill the gap at 403.70. Why did I say 403.70 if 405.40 reacts as a resistance? Well, it's a gap up. It's inflated. You can visually see there's not much support. You could say there's some support at 404.50, right? But overall, if this reacts as a resistance level, it's going to drop to the pre-market lows or to this 404 bottom wick level, right? So if it reacts bearish, if the bulls get trapped here, that's where it's going to drop to. Now, why did I say 408 if it reacts, if it reacts bullish? Why did I say 408? Such a big difference, right? Because on the daily chart, the next resistance level, right? So the resistance in the pre-market was at like 405.45. So if it breaks above that, reacts as support, the trend's going to remain bullish. And then it's going to go to the next resistance level on the daily chart. Where's the next resistance level on the daily chart? You can see right here, if we're looking at the daily chart, this high is 404.67, right? And if it breaks above that, I was also saying very ideal to not do puts above 405 as well because it broke above this. If it breaks above that, your next resistance level is at the high of this, which is 407.45, 407.51, and there's also a gap at 408. The reason why I said 408 is because $408, the gap has not filled at 408. We've been targeting for this gap at 408.28. As you can see, this gap filled at 407.51. Massive bull trap. Stock started to, get crushed, right? So that's why I said that, right? So what you need to understand as a trader, right? When you're looking at the pre-market high, you need to never underestimate a situation. Never underestimate, never underestimate a stock's price. Never underestimate where it can go. So you can see right here, 405.45, it's breaking out. Now, if it's breaking out, does that mean that it's forming a floor, a support level at 405.45 pre-market highs? No, that just means it's breaking out. Doesn't mean it's bullish, just having a breakout. It could have a fake out, right? But look right here. As soon as it started breaking out, bottom wick, this red line is at the pre-market highs. It's forming support. It's pushing back up, higher support, pushing back up, forming support, pushing higher, right? So what does that tell us? That tells us that the pre-market highs is a support level and it's continuing to push up. And the daily chart says the next resistance level is at 407.50 and there's a gap to fill at 408. Therefore, since it is forming a floor, not only breaking out because it could be a fake out, since it's forming a floor, pushing higher, forming a floor at the pre-market highs, there is no reason for puts. Now, this was looking bearish to me, right? So it was early in the morning. You guys know at 9:58, you guys know there's a lot of games that are being played first 30 minutes of the market open, right? So a lot of flip-flops happen, a lot of volatility, right? A lot of things can change quickly, and then you could see reversals at around 9:50 a.m., right? So I ended up playing puts right around here when this was at 405.60. I ended up playing puts, 405.60, which was 15 cents above the pre-market high. I played some puts, right? So I got in towards resistance, not the best level. I did get squeezed. It went to $406. I did get squeezed. I decided to hold through that. My max pain was around 406. I'm not risking more than that because I know if it blows through this 406 resistance, the next resistance is on the dailies at 407.50 to 408. If I were to continue to hold, that's my risk, 407.50 to 408, right? There is no other levels of risk. It's all in the daily chart. So, I continue to hold my position. And then I had a realization, wow, it's trying to push higher. It keeps forming support. It keeps forming a floor at this pre-market high. So that's bullish. It's pushing higher. It's forming a floor at a previous resistance level after breaking out. And instead of having that big downside move we were hoping for, right? Because if this reacts as a resistance, you got a nice downside move to 403.70 to fill the gap, right? The gap fill would be one of the price targets towards 404 wick. Well, it's going to form a floor. If it's forming a floor, it's going to do the inverse. Instead of having that big downside move to fill the gap, it's going to have a big upside move. So when you see that occurring, you need to sell your puts. So what did I end up doing? I noticed that a floor was forming and everyone in the chat was bearish. They were all bearish. Everyone was bearish. And I ended up selling my puts into the floor. I said, okay, a floor is forming. It's pushing higher. I basically got stopped out in a sense, but I didn't because I didn't sell. I used mental stops. It just crashed right back down instantly. But I noticed that a floor was forming and that's bullish. So when it dropped back to the support line, I got out because that's where it's going to try to bounce. And then it bounced again after I got out. I got out for a very small win. I sold it at 405.50. I got in at 405.60, right? So a very small win with my puts. Then I noticed it bounced again. So I'm starting to think to myself, SPY likes to reverse around 10 a.m. and it's at the support line. So since it's at the support line, it's going to try to reverse to the upside and it's going to continue to try to turn this previous resistance into support. So I'm looking at the chart and I'm saying there's a clear floor. All these people in the chat within Trader Society, all these people are super bearish. They're ignoring the floor. They have no valid reason for puts. And I took advantage of it. I bought call options. I bought call options into the low on this dip at 405.50 right here. And then I sold the rip. Will, why didn't you hold, right? It's bullish. It's going to try to continue to break out. Why didn't you hold with the trend? I don't hold with the trend. The reason why I believed the trend was going to be bullish, at first I thought it was bearish because it was forming resistance. But then I had a realization it's pushing higher, nearly get stopped out, sell the floor, buy calls at the low, right? Previous resistance is reacting as support. So instead of this big downside move, big upside move to 407, 408, like I said in my key levels, the pre-market highs react as support. So Will, why didn't you hold with the trend and why didn't you hold with your targets? Why did you sell at the double top at the resistance level? Because that's what I do. I scalp, and you can make money scalping against the trend. You can make money scalping with the trend. It's a lot more lucrative and a lot better risk to reward ratio to make money scalping with the trend and a lot safer, right? But you do have to understand where traps get created and where reversals can occur. I love trading reversals. But anyways, that's how I was able to capitalize on calls. I identified that SPY was pushing higher. There was a clear floor right here. So to me, it was a no-brainer. I'm looking at this and I'm saying, why not buy calls at 405.50 and then set a max pain right around here at 405.20 and then just ride this up a little bit. And then that's what I did, and I sold the rip. The reason why I didn't continue to hold my position is because I scalp, and a scalper gets in and out within minutes. Basically, I'll look to capitalize on a 30 to 50 cent move on SPY, get in and out with my contracts, and I'll size in very heavy on some safe contracts. You can make a lot bigger percentage-wise with 0 dates, but they're also more riskier in your fighting theta decay, so you got to size smaller on those. With my account size, I will use like a 5 to 7 day expiration, and I'll size in extremely heavy to fight theta decay. And I'll just get in and out because that's all I need. I'm not trying to hold and hope. Basically, what I'm telling you is the trend should be bullish if this previous resistance turns into support, but it can fake out at 406. And if it fakes out at 406, it drops back to my entry. And it could go below my entry, and I could go green to red, right? Now, we do know it should try to break out and go bullish because there's a consistent floor here at 405.50, which is a great confirmation, and it kept trying to push higher. But at the end of the day, it could have faked out at 406. It could have. However, I did align myself with the trend, and the trend was bullish because there was a solid floor, a solid support level, bottom wicks, bottom bullish wicks, bottom bullish wicks, consistent bounces at the previous resistance level, right? If I'm shorting SPY, I see the resistance in the pre-market, right? I saw the resistance in the pre-market. I went short a little bit above 405.60, so that gives me some leverage, some wiggle room. But if I'm consistently seeing that it's forming a floor and it's bouncing, and it's going higher, and then it's bouncing at the floor, I'm selling those puts and sitting on the sidelines, or I'm just going to switch to calls. You have to adapt. There is no holding and there is no hoping. As a scalper, I don't hope for SPY to break above resistance. I sell the rip. I sold right here. As soon as I sold, it pulled back to 405.60. People are like, how do you sell the exact top? How do you bottom tick and top tick SPY? I look at the chart. That's what I do. I say, okay, where is SPY bottom ticking? It's bottom ticking. The floor is right here at 405.40s. That's where you go long. Where's it top ticking? Well, top ticking isn't ideal for puts because the trend's trying to flip bullish. The trend's trying to go bullish because previous resistance is support. Therefore, you shouldn't even be focused on buying puts at the rips because eventually it's going to try to break out. But if you are going to try to scalp against the trend, 405.77 was the top tick level, right? But you're scalping against the trend because there's a floor and there's a support level at previous resistance. And if you scalp against that, you are at risk of getting caught up in a major bear trap, which will eventually occur, right? This is so simple. This is so predictable. Look at this. Resistance right here, 406. How do you know it's bullish? Not only is it breaking out, that doesn't mean that it's bullish. It formed a dragonfly doji, higher support at previous resistance. I was shouting in my chat room, laughing at all the bears who were ignorant to not responding to the trend and to the chart accordingly. They are trading blind. I literally told them when this was at 405.50, after I sold my puts, I told them, you guys are literally trading blind. I'm in calls. And the amount of shit that people were giving me saying you have no conviction, la-di-da-di-da, I'm like, bro, I'm a trader. I scalp. I adapt to the chart. I don't hold. I don't hope. I sell the rip. I don't care if it goes higher. Look, it went higher. I could have made more, but guess what? I can just rebuy right here. Previous resistance reacts to support. I can get back in, sell another rip. Previous resistance reacts to support and get back in, sell another rip. I did that several times. I went 6 for 6 on the day, mainly on calls, right? And I advised against puts. As soon as I sold my puts towards the low, right around here, and then I switched to calls, I told people avoid puts. There is a floor at the previous pre-market high. That big downside move is not going to come until this floor cracks, right? So in terms of, for this to actually be bearish, this is confirmation right here. You want to see a confirmation of bearish? It cracks. Just because it cracks doesn't mean it's bearish. Just because it breaks out doesn't mean it's bullish. But if it cracks, reacts as a resistance, right? It forms a roof at this level, then it's bearish. But look right here. It's doing the opposite. Don't you see? This is bullish. This is bearish, right? It's simple, man. You have to wait for it to break out. SPY breaks out above the pre-market high. Okay, is it a fake out or not? How can we tell if it's a fake out or not? If it forms a floor, a support level at the previous resistance level, then it's not going to be a fake out. It's going to try to react as a bullish breakout and continue to run. And you can continue to scalp with that trend every time it breaks out. So if it has a breakout above here at 406, you can wait for it to go higher. And then when it drops back to 406, you buy the dip, right? Now, I like doing that with overreactions. So let me show you another play that I hit on SPY calls. This was a very nice one where I bottom ticked it again. And it's no surprise on how I do this because I'm trading with the trend. So let me show you this one right here. I nailed calls at the 407 level. Let's see, where's 407? So I told people 407 is the best price for calls, and it was the exact bottom. I bought calls literally right here. As soon as this went under 407, I bought calls. Why did I do that? Because the resistance on SPY was at 407. It started breaking down, then it had a major breakout. Went to 407.70. That's a nice move. I want overreactions. The bigger the overreaction, the better. If it's going to instantly drop back down on a bullish trend to previous resistance right here, that previous resistance level is going to be the new floor. Don't you see? This is where the bear trap got created right here at this resistance level. It had a nice breakout. We didn't know it was going to break out. We let it break out. And then when it drops back down to that previous resistance level, we buy the dip. The initial reaction is always going to try to be a bounce with that bullish trend, right? I didn't buy 407 right here because it wasn't having that massive breakout. I bought 407 over here because it already had a massive breakout. It's already confirmed bullish. I already let people get trapped. And then when it goes back to their trap level, I get in and take advantage of it. I'm not predicting anything. This is very simple, guys. Very, very simple. So those were the main two trades that I ended up making on that day, but I had some phenomenal trades, man. I went 6 for 6, 100% win rate for scalping. But that's just, how I view the markets and how I view the charts, right? So, in terms of all the people who went red, they're ignorant. Ignorance is bliss. If you're buying puts at 405.60, your max pain is right here at $400, $406, right? Because we know on the daily chart, if it starts pushing above the highs, it's going to go to the next daily resistance level. And the next daily resistance level is right here. Look, high of this is at like 405 almost. Next resistance is going to go to 407.50 to 408. Why is that so hard to understand? Why is that so surprising? Why is that so shocking to most people? And by the way, for those of you who are using Webull as a broker, they actually have inaccurate levels on their daily chart. If you look at some of the levels on their daily chart, the high of day, the low of day are completely inaccurate. Some of the levels on that are completely inaccurate, which is going to screw up your technical price action analysis. It's also going to screw up the gap levels. So just be aware of that for those of you who are using Webull for charts. So yeah, those are just some things that I want to bring awareness to. So that's how you avoid getting trapped. So what you need to but you need to have the mindset of, right? So if you're buying puts right here at the top, your mindset needs to be, I'm trading against the trend. I am trading against the trend. Why? Why am I trading against the trend? Because previous resistance is a support. There is a clear floor, a clear bottom pin, a clear bullish reversal, a clear breakout levels at previous resistance. This big downside move isn't happening because this big downside move isn't happening. It's not filling the gap. Why? Because support, the floor. Look at the floor. You have to read it. It is your responsibility as a trader to read the chart. You need to understand, okay, is it forming a floor or a roof at this key level, right? This is a roof, right? It cracks, spikes back up, reacts as a resistance. This trend line that I drew, that's a roof. This is a floor. It breaks above the level. It breaks above the pre-market highs. Could be a fake out. It bounces off previous resistance. Likely not going to be a fake out because that means that it's bullish because it's forming a floor, it's forming support, it's pushing higher. That's bullish. So when you see that, your mind needs to go, okay, if I'm in puts, I'm likely going against the trend. So I either have to get out at some point on the dip. I could just get out, try to switch to calls, or I could just hold and hope against the trend, max pain 406, because if it breaks above 406, we're going to 407.50, 408, respect the daily chart. Stop holding your hopes. Stop holding your options. You need to scalp them in and out. Yes, big accounts have a huge advantage with scalping because they can make a lot more money. If you have a small account, you're not going to make a lot of money scalping, but you can grow your account. That is a myth. For those of you who are scalping in and out, within minutes, you're making your small gains, you can grow your account. You will not make a lot of money. You're not going to make a lot of money scalping. If you have a small account, you shouldn't even be looking at the dollars. You should be focused on compounding your account and the percentage wins, right? But you can grow it. It's just going to take time. It will take over a year. You know, it's going to take years. Look at people go to school for 4 years to make absolutely nothing. It doesn't guarantee them a job, right? It's going to take time. No one said you had to start with the small account. That's on you. Nobody said you had to join the stock market with the small account. You can figure out how to make more money another way and start with a bigger account. That's on you. There is no complaining. You get what you give within this world. So what you need to understand is scalping is the way, man. I'm telling you, I've tried everything. I've tried holding, I've tried day trading, I've tried swing trading, I've tried scalping. I dislike swing trading. In a sense, it's gambling. The main reason why I dislike swing trading is there is risk you cannot control. The stock can have a big gap up or a big gap down, and that's like flipping a coin, right? And I don't like flipping coins. I like controlled risk. I like very small losses. And I know this is what I told people within my chat, man, because I saw them. They were all holding puts. I told them, scalp the puts. All those bears talking shit to me when I was when I sold my puts towards the dip. Oh, you got lucky. You sold the low. I didn't get lucky. I looked at the chart. I said, this is where the floor is. I'm going to get out here because that's a great entry to sell puts, right? And then I'm going to switch to calls because the trend's bullish because previous resistance is support. It's not fucking luck. So you need to work on preventing big losses, man. I'm telling you, as a trader, the biggest thing that I've ever struggled on is big losses, losing big. Most people cannot even keep their profits. Your account has no chance in growing if you cannot even keep your profits. If you can't keep your profits, your account is going to get obliterated. You need to keep your profits. You need to have small losses. So you have to ask yourself, what is a way, what is a strategy, what is a system where we can prevent big losses? That is the number one thing that you really want to focus on, is preventing those big losses. So these are some tips that I gave out within my experience. So what you need to understand is, as a trader, you cannot afford to ever have a big percentage drawdown. Forget the dollar amount. Doesn't matter if you lose $500. Doesn't matter if you lose $1,000. Forget the dollar amount. You need to understand you cannot afford to have a big percentage drawdown on your account. So on the day, what's like a big percentage drawdown? You don't want to go under like 2 to 3%. You need to stay below like 2 to 3% on the day. Even 3% is a lot. So that will give you some perspective, right? And you need to understand a big percentage drawdown on your account is going to knock you out in the long run. You need to shift your mindset. I'm not going to make a lot of money at first. This isn't about making money. This is about becoming a better trader. This is about instilling the right habits. This is about trading the chart. Yes, looking at history, looking at the trends, but understanding, oh, a confirmation is now saying that that history and that trend that we were banking on this week is not going to repeat itself. So it's time to adapt and either sit out or capitalize on the new trend that's coming. You must be aware of these things. I was not aware when I bought puts that there was a floor at previous resistance. I was not fucking aware of that. But once it started bouncing, 1 time, 2 time, new highs, 3 time, 4 time, some awareness kicked in and said, oh, it's going higher. There's a floor here. I'm going to sell my puts and try calls at the best price because the trend's likely bullish. Puts weren't attractive even at here because the trend was reacting bullish because previous resistance is support. Don't fight the trend there. So anyways, how do we prevent big losses? Well, you need to understand what can create a big loss. How are big losses created? There is plenty of ways, plenty of elements, plenty of aspects, plenty of things that create a big loss. So sizing in big. Sizing in big, especially on a short-term expiration, can create a big loss. Me personally, I size in big. Now, what is a big size for me? 20, 25% of my account. That's a lot for an option. But the options I'm choosing are 5 to 7 days. Very little theta decay. Not super risky if you scalp. You get in, you get out within minutes. I'm not holding for more than like 5-10 minutes. I get out so fucking quick. And it adds up. All these small gains are adding up because I don't have big losses. That is why. Yes, I do have a fairly good win rate, which helps when you have a lot of small wins. It does help. It helps you get there faster, but it's not required. You don't need a high win rate. So getting a poor entry can create a big loss. Avoid trading against the trend. Avoid getting poor entries. Use tight mental stops. Get in, get out quick. Holding a position for a long period of time can create big losses. This is why I hate swing trading. You have to hold and you have to hope. There's uncontrollable risk, right? I don't like swing trading. I like being in control. I don't like holding through news events. I like taking advantage of something that's very clear to me. It's very clear what was going on. In the morning, it wasn't clear to me. Right around here, when I was buying puts and everyone in the chat room was buying puts, it was not clear to me. It was not clear to me that the trend was reacting bullish. But once it bounced a couple times, had a breakout, things became very clear to me, but not to everybody else. But guess what? I'm not following other people. I'm looking at the chart. I'm trading the chart. Everything you need to know is within the chart. If you are trying to follow someone, they need to be masters at reading the chart. And you need to become your own master at reading the chart. That's what this comes down to. All these people in the chat saying, Will, you have no conviction, la-di-da-di-da, why'd you switch? Look at the chart. I'm trading the chart. What are you trading? I don't give a shit about what you're trading. I'm looking at the chart. I don't care about your opinions. I trade and I focus on the chart. If I see a floor at a previous resistance level and I buy puts, I'm trading against the trend. And yes, you can make money going against the trend, but eventually you can get caught in a bad squeeze and it's not worth it. Trading against the trend will lower your risk to reward ratio. And yes, you can make money doing it by buying puts here and selling. But eventually the trend's going to kick in. You're going to be like, oh man, the big move, la-di-da-di-da, stuck holding hopes or whatever it is, right? Just put yourself in high risk to reward ratio trades. If the trend's reacting bullish because there's a floor at previous resistance, either sit out or just buy some calls at the dip with a tight stop. Because yes, there are going to be times where you buy calls here because there's a floor, it cracks, and then it reacts as a resistance, and you sell and you cut your loss quickly, right? Because that would trigger the bull trap, and you don't hold and you don't hope, right? But it was very clear to understand within some time, right? This is another thing you guys don't understand. If you want to be accurate with your trading, this is something that I've noticed as well. This is another tip I'm going to give you. Wait for something to develop. Wait for traps to get created. Wait for something to be very clear. What's clear? Well, previous resistance right here is reacting as a support. Right here, it's reacting as support. Pushing higher, new high day. It's clear that the bulls are trying to show up and they're trying to take control of this trend. Oh, another breakout. Oh, there's a little gap to fill here. Oh, it's reacting bullish at this mini gap, bullish mini intraday gap, close reversal. That matters, right? So the longer you wait for something to develop, the more understanding you will have of what actually is going on. If you rush into a trade, things can change very, very quickly. I would encourage most of you to wait until at least 9:50 a.m. to even consider trading. I would skip the first 20 minutes because you can see, look at the first 20 minutes, man. Oh, it's bearish, it's cracking, it's bearish. Oh, it's bullish, now it's ripping above 4-minute support. Oh, they're trying to go back. Like, it's a mess. It's a fucking mess, right? For most of you, I would just suggest to skip the first 20 minutes. You're not missing out on anything. You're missing out on high volatility, a bunch of bullshit traps, a bunch of bull and bear traps, a bunch of chop. Skip it. It's a disaster. If you actually wait for something to develop, you realize how simple and easy it is to identify, oh, there's a floor here. It's been pushing higher. Bears have been getting screwed here. It makes a logical sense to buy some calls right here at the low, right? So let's go back to how do we prevent big losses, right? Holding a position. If you hold a position for a long period of time, you are exposed to massive losses, dollar and percentage-wise. Now, if you want to hold your hopes, you got to size in very, very small. But me personally, the way I trade, so what you need to understand is I could try to sit here and develop a trading strategy where I hold, but I would have to size in very small because if you hold for a very long period of time, you will have much bigger percentage wins. Now, of course, you can minimize that by going with further dated expirations. But what I'm telling you is if you're holding a position for a long period of time, you need a very small position size, and small accounts do not have that opportunity in a sense, right? So they're going to get screwed holding positions. They're going to get absolutely wrecked. This is what small accounts don't need to understand. They need to understand that scalping is actually the right thing for them to do in the long game. And if you're not in this for the long game, my friend, you shouldn't even trade. If any of you are watching this video and you're not optimizing for something that's going to keep you in the long game, in the long run, you shouldn't even be trading. I'm telling you right now, if you're not in for the long game, you're going to waste your time and you're going to waste your money, and you should just get the fuck out of the market and do something else with your time. I'm being genuinely blunt about that because it's true. You need to set yourself up in a situation where you can actually be here for the long game and you can keep your wins, right? So what you need to understand is I can try to create a strategy, right? And I've tried this before. It's not the best thing to be doing. I try to create a strategy where I hold a position. Problem with holding is if you hold a position, it's going to be big percentage wins or big percent losses. So you need to size in small. So it's going to waste my time and it's going to waste my time and my energy. So what I do is I size in big. I size in like 20, 25% of my account on a 7-day expiration, no theta decay, but my rule is I get out within minutes. So if I'm losing, I sell my loss within minutes, no matter what. That was the game changer. I cut my loss within minutes, usually like 2 minutes max. That's how fast I get out. Within those 2 minutes, I can lose like 1%. And then my wins, I make like 2-3%, sometimes 5%. I get out in and out very, very quickly. That's what I do. And I size in big. And all these small little trades, a couple a day adds up. And you keep on compounding your account. And it continues to add up. Next thing you know, you're at 50 contracts, 100 contracts, 200 contracts. Scale it up. That's what you have to understand. If you're starting with a small account, you need to be focused on scalping. You're not going to be making much money. Focus on the percentages. You will not make much money. Trading a small account, you're not going to make much money. All these people you see who are making a lot of money with their small accounts, I'll tell you what they're doing. They're going with 0-day expirations. They're going all fucking in. They're holding their hopes, and they're aiming for big wins. If you aim for big wins, you will have big losses. And our rule is to have no big percentage drawdowns, right? So how do we prevent all that? Well, like I said, do not size in big, right? For me, a big size, 20-25% on a 7-day expiration. Now, if I'm doing like a small account and I'm doing a 0 date, I'm putting in like 5%, 10% max. You should keep it under 5% if you're doing 0 dates. A good balance for small accounts is a 3-day expiration. That's a good balance, a 3-day expiration. So high volatility, news events, FOMC, it all creates bigger losses. What you need to understand is volatility and momentum is a good thing. But in my opinion, it is not a good thing if it's too high. If the momentum and the volatility is too high, it is dangerous and it is not a good thing in my opinion. One little mistake can cost you a lot of money, especially going against the trend, and then you go with the trend, you get a poor entry or something, then it flips, then you're stuck holding. You need to understand, volatility is a great thing, but another great thing is understanding this, right? Volatility is nice at market open, but what sucks about market open is there's lack of confirmation. The volatility is too high. Sometimes news events come out as well. Trend reversals can happen at 10 a.m. There's a lot of flip-flops. There's a lot of chops, and the chart has not developed. Using the 30-minute chart has been the biggest asset to me. And another reason why I was laughing at the bears nonstop, capitalizing on dips with calls on Friday, was because I read the 30-minute chart. And I looked at the 30-minute chart on SPY on Friday, and I said, wow, if you guys actually look at the 30-minute chart, which is something that for some reason people don't use in the chat room, if you looked at this, you would say, wow, there's no bearish candle on the 30-minute. Oh, look right here. Here's a bearish candle on the 30-minute. What does it do next 30 minutes? Oh, it sells off. What does it do after that? It drops a little bit lower. Oh, that would have been a nice opportunity for puts. But what about right here? Oh, there's a bullish floor in the 30-minute. Oh, every candle's green on the 30-minute. What is so surprising? What is so hard to understand? This is so simple. You guys need to trade the chart and stop complicating things. Stop blindly following people. Understand the key resistance levels, the key support levels. Understand if that level reacts as a resistance level. So if this turns into a roof, we fill the gap. If this turns into a floor, we go to 407, 408. Understand these things. Understand how levels work both ways. If this resistance level reacts as a roof, we're going to drop down to this level. If this support level reacts as a support level, we're going to spike to this level. If this support level reacts as a resistance level and it cracks, we're going to go down to this level. If this resistance level breaks down and reacts as support, we're going to spike up to this level. Know how it works both ways. Like, yes, we understand bull and bear traps, but also understand if that bull trap turns into a bear trap, how high does it go? If a bear trap turns into a bull trap, how low does it go? Understand these things. Understand how trading works both ways. Even if you have some sort of thesis on why you're bullish or bearish, understand the flips both ways. So how do we prevent big losses? How can we ensure that we never lose big? Well, you got to do this. Don't size in heavy on 0 dates. If you're doing 0 dates, which at this point I wouldn't even recommend in terms of the level that I've hit, you got to do 5%. 5% max is what I recommend. If you're super risky, do 10%, but keep it at 5% of your account. And just understand you're fighting theta decay, and it's extremely risky, and it can be tough. You got to time it perfectly, right? If you want a balanced approach with a small account, go for 3 days. 3 days is a good balance for a small account. If you have a large account and you want a balanced approach where there's practically no theta decay, 7 days is the perfect length. 5 days is good, a lot more volatile, less theta decay, right? So do that if you want to play it safe, right? Now, work on getting better entries, right? So understand 0 dates can create big losses because big percentage gains and losses, right? Now, if you're not putting a lot of money, then it's not going to be a big loss, but it can still be a big loss because it's a big percentage. You need some sort of balance is what I recommend, right? So 3 days is a good balance if you have a small account. If you have a large account, 5 to 7 days, there you go. I would avoid the 0 dates in a sense. If you're going to do them, size small, under 10%. So work on getting better entries. You need to work on getting better entries, right? And one thing that you need to understand is when you're buying calls, you need to buy into the red candle. So what do we know? We know in terms of the SPY, this red line, which was the pre-market highs, if it reacts as a support, it's bullish. So if you waited, it breaks out, reacts support, breaks out, reacts support, breaks out, reacts support, breaks out, reacts support. You get the point, right? There's a little gap here. So what are you going to do? If you're going to buy calls, you need to understand, okay, it keeps bouncing here. That's the best level. And if it cracks and reacts bearish, I got to cut my loss quick. But you need to understand, you need to just get in. Once it's proven, like just get in. Get in at the best level. What's the best level? Right here towards these wicks. Now, when it gets down to these wicks, these candles won't look green. They will look red and they will look bearish. And what I'm telling you is that's when you have to get in. You have to get in your calls when it looks red and bearish. Not when it looks bullish. Oh, now it looks bullish. Let's buy up here at 405.65. No. Get in here. It looks bearish. Understand, this candlestick may look bullish here, but when it's down here, it looked bearish and people were fearful. And that's what I do. I buy the bottom tick. When the candle looks red on the dip, that's where I buy my calls because I know my levels. You tell me, what would you rather do? The support's already proven, man. Look, it's breaking out. It's forming support. It's already reacting bullish. I don't need another confirmation. Look, what would you rather do? Would you rather buy when this candlestick looks red and ugly at the exact low? Or would you rather buy after it spikes and looks bullish at the exact top? If I'm buying here, my risk is right here. If I'm buying here, my risk is right here. Where the other guy's buying. Don't you get it? That's my trick with scalping. Why do you think I fucking love scalping? Because look at this. I'm buying when this looks bearish, when this looks bearish, when this looks bearish, when this looks bearish, and I'm selling to the fucker up here. That's who I'm selling. I'm selling to the fucking idiot who's buying up here. Don't you understand? And those small little moves are bank. They are bank, man. People are making thousands of dollars off that small little fucking print, man. That's what I'm doing. And you need to do the inverse with puts. So with puts, the resistance is here, right? So when the resistance is proven here, okay, so you buy a put when it looks bullish up here, not when it flips bearish and starts to drop. Don't you get it? Buy the puts at your level when it looks green and bullish. Your risk to reward will be better, your entry will be better, and you can risk a higher level than the guy you be selling to. Don't you understand the game, man? Know the game. So there. That's one tip I can give you, right? So calls, red candles, best price. Puts, green candles, best price. If the candle flips, you're good to go. If the candle doesn't flip, risk like 1 to 2 minutes max, just get stopped out. Get stopped out quick if it doesn't flip, right? So when you get in, you want that candle to flip. You want to bottom tick that. You know the support's here, so you want to buy when it looks ugly, and then you want it to flip quick. You want it to flip bullish. If it doesn't flip your way in your favor, you risk like a couple minutes max, and then you just get stopped out. But you want it to flip. That's what you want. You're aiming for the best entry, and you're aiming for the flip. If it flips, you're good to go, and you got the best entry. So what are some other things that I could say? Scalp, go in and out within minutes. You must cut your losers quick within minutes. There is no bag holding in this game. If you hold your hopes, you're going to lose. If you hold your trades, you're going to lose. There is no, oh, I should have held my win for bigger win. Nope. We scalp. We get in, we get out. We cut our losers quick. And there is no, we let our winners run. No, we're not doing that. We're going to take our wins, and we're going to cut our losers quick. That's what we're going to do. And we're going to get a nice win rate, enter some great trades, right? There is no, I regret selling too soon, none of that. No, we scalp. We get in, we get out. We don't hope for breakouts. We don't hope for breakdowns. We get in at the best prices. We take advantage. This little fucking trick is my benefit. This right here. I enter my calls when the candle's red, not when it flips bullish. I enter my puts when the candle's green, not when it flips bearish. That right there is my scalp, folks. That's the fucking secret. If you're looking for it, I just gave it to you. So that's one little trick that gets me in at the best price. And another thing that you need to understand is, avoid trading on FOMC or even the first 20 to 30 minutes of market open. Avoid volatility that is too high. Avoid news events. Avoid swing trading. So don't hold for long periods of time. Don't hold through news events. Don't trade during big news events where the volatility is too high. Avoid the first 20 minutes of market. Wait for people to start to get trapped. Wait for the shit show to end a little bit. Wait for the 30-minute candles to develop, man. If you want puts so bad, why don't you wait for a 30-minute candle to actually look bearish? For all you people who ignored the 1 minute and 5 minute floor at previous pre-market highs and got squeezed, which is very well deserved. Good for you, all you fucking losers, because I told you guys you were going to lose, but you didn't listen. So that's on you. That's not on me. My portfolio's up. And I'm not telling you to blindly listen to me. I'm telling you to trade the chart. I'm going to show you how to trade the chart. You trade the chart, right? If you know how to trade the chart, you could check me. If I'm off on a day, right, because us humans, we're not fucking robots. I'm going to have off days. If I'm not reading the chart well and you're reading the chart well, guess what? You can call me out on my bullshit. There you go. But you can't call me out on it if you're blindly following and you don't understand how charts work. But look, man, wait for 30 minutes. 30-minute was bearish here. Oh, now it starts to drop. 30-minute was bearish here. Oh, now it starts to drop. 30-minute was bearish here. Oh, now it starts to drop. 30-minute bearish was here. Oh, now it starts to drop. What is so hard? Like, why can't bearish just... 30-minute was bearish here. Oh, now it starts to drop. 30-minute bearish was here. Oh, now it starts to drop. 30-minute bearish here. Oh, now it starts to... Do you understand these scalps are all bank? These 30-minute charts are golden, man. This is the pot of gold. It's in the 30-minute charts, man. Use 30-minute charts. Why are you buying puts into every bullish 30-minute candle? Don't you get it? These 30 minutes are going to direct the next 30 minutes of price action. So that's another tip I can give you. Let's go back to this. So we went over it. Yeah, we went over everything. Yeah, this is everything. Yeah, scalp quick within minutes. That's what I want to go over. So yeah, we're good to go, guys. So that's my little rant for the day. That's the education. For those of you who stayed to the end, you got rewarded with the best information possible. So here's the deal, man. Trader Society. We are going to be raising the price of this program very, very soon. We're supposed to raise it tomorrow. It's going to be raised very, very soon. So this is like our last call almost. If you want to get in now, it's the first link down below in the description. One-time fee, lifetime access. We're going to absolutely crush it, man. We have people in here that are consistently making 5 figures every single day. If you want to join us, it's a one-time fee. It's lifetime access. You get access to the video lesson library. You get access to the courses. You get access to live trading streams, the live trading voice. You get access to the Discord server, the networking opportunities, the moderators within the Discord servers. We will be doing meetups end of this year. You get access to my real-time trade alerts. Every single scalp that I alert is in real time, so you can see what it is that I'm doing, right? You have my entry, you have my exit. You look at the charts, you put 2 and 2 together, you start to see some trends, you start to learn. My analysis on Friday was so spot on, man. Like I said, I bought puts, jumped the gun, recognized the trend was bullish, cut my puts to the support, switched to calls, right? There is no conviction in this market, man. It's an unconvicted market. Just get in, get out, no holding, stress-free, small wins, nice win rate, small losers. This is what we do, man, and this stuff adds up. I used to make fun. One of the richest traders, he's now a millionaire within Trader Society, Dimitri. I used to make fun of this guy. He would scalp within seconds. He would scalp momentum in seconds. He would buy an option in seconds. With 7 days, he would do it with 7 days, not even 0 days. 7 expirations, in and out. He makes $1,500, $2,000, $3,000 in seconds with his size. He didn't start that way, but he does it in seconds. I do it within minutes, so my losses and wins could be a lot more bigger than his because I hold for a couple minutes usually, like 2-5 minutes. He gets in within seconds, right? I was making fun of this guy. Then I started realizing what he was doing with this thing that I taught about the candlesticks, right? Remember the calls on the red candles, the puts on the green candles at the best prices, right? I started realizing this whole scalping thing is where it's at. People don't understand this stuff. They don't know this stuff. And they're getting burned, holding their hopes, man. It's very tough to hold a position, aim for big wins. Big losses come with that. I want to take stress-free, very simple and easy type of trades, right? I started realizing this guy was onto something, man. And what I took away from him was, because I already knew the candlestick trick, one thing I took away from this guy was it was my losses. Big losses would always set me back, man. Eventually I would come out on top, but then when I hit those new highs, have a big loss, drop right back down, just was up overall still. But big losses, man, since this guy would just get in and out so quick, he would never lose big. And his wins would add up, even though they were smaller wins in terms to his account size. It would add up, man. He would make enough trades a day. He would cut his losers quick, and he sized in accordingly, and it added up, man. So what I've realized is, man, small wins add up, and cutting your losers extremely quick is the game, man. Never have a big loss. So if you want to join Trader Society, it's the first link down below in the description. And what we do is we scalp SPY for a living, right? So with that being said, well, we scalp SPY to live, right? So we're doing this to live. That's why we're doing this. So yeah, I will see you guys within the first link in the description, first link down below in the description. You guys can join now.